Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the Week in Focus for the week of August 29th. Well, it's another month, another non-farm payrolls. We also get the final Purchasing Managers Indices, the PMIs, this week, including the PMIs for China and the UK. We get German and EU inflation data and a variety of other indicators from Australia and Canada. Now, the non-farm payrolls, the NFP figure on Friday is particularly important because it's the last one before the September FOMC meeting, before the Fed meeting. And as we heard from Fed officials in Jackson Hole on Friday, there's a good chance that the Fed raises rates in September, depending on the data. The market is forecasting a non-farm payrolls rise of 185,000. It's also forecasting a further decline in the unemployment rate to 4.8%. Now, 4.8% is the same level that the FOMC said in June represents the long-term unemployment rate. So those figures might meet the Fed's qualifications for raising rates. So if the non-farm payroll firm data does come in as expected, watch for a rise in Fed rate expectations and a stronger dollar. Before Friday's NFP, the market will be waiting for Wednesday's ADP report to get an idea of what the NFP may be. The fact is that the correlation between the two reports hasn't been so great recently, as you can see from the graph, but that doesn't seem to matter to investors very much. The other main feature of the week will be Thursday's release of the final PMIs from the countries that we got preliminary ones from last week, such as Europe and the US. And of course, we'll get the PMIs from those countries that we didn't get initial data from, such as China and the UK. Now, the PMIs for Europe and the US showed continued expansion. China, though, is expected to show either stagnation, according to the official PMI, or even a marked slowdown, according to the Caixin Market PMI. For that matter, the US ISM Institute of Supply Management, the ISM Purchasing Managers Index, which is also out on Thursday, is expected to show somewhat of a deceleration in the US. Now, the EU has its inflation data out this week, the German CPI on Tuesday and the EU-wide CPI on Wednesday. They're expected to show a small acceleration in inflation. Combined with the stable PMIs, this may reduce expectations for further monetary easing by the ECB, and it might therefore support the euro. There isn't much else out from the UK this week besides, as I said, the manufacturing PMI on Thursday, and also we get the UK construction PMI on Friday. Mortgage approvals are expected to be lower, but that shouldn't be a surprise after the British Bankers Association figures last week. The GfK Consumer Confidence and the nationwide house price index may get more attention than usual as investors try to glean any insight they can into what's happening in the UK now. As for today, not much is happening in the UK. The UK is on holiday today, and there are no major announcements due out during the European days, so trading is likely to be thin until the US trading days begins. Tune into my North American comment for a discussion of today's US indicators. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.